What does it mean to have owner-financed land in Alaska? That is a very good question. We're going to dive right into it. Welcome to my channel. My name is Laurie Goodrich with the XP Realty Wasilla, Alaska. Today we're going to talk about what it means when a property is listed owner financing. Owner financing means many different things to many different people. So this answer isn't a clean cut, this is what it is kind of answer. It's a this is what the great idea of what it is and what it can look like and what it usually looks like. So keeping that in mind, any offer is a good offer. And if the seller accepts it, then that was a good offer for both of you. Here's what it usually looks like though. I want you to remember there's expenses for selling your property. If it's listed on the MLS, they have incorporated so that they're going to pay some brokerage fees. And they also have title company fees. The title's important because it's going to show you that they have the right to sell that property to you. And it's also going to show that there's no liens against the person buying the property so that they can't buy the property. The title company is also going to set up an escrow account and tie you into one of the lending institutions that can monitor the payments as they come in. So there are some fees associated with selling your property. So put yourself in the shoe of the seller. The seller's not going to want to pay money out of the pocket to trust you to finish paying the payments toward the loan. So with that being said, a good rule of thumb is that you're going to need about 20% down to 25% down. Some sellers may take a little less, some sellers may want a lot more. So that is a general idea on that. If you were to go get a loan to buy land, at one of the couple local banks that do it. First National Bank does loans and Matsu Federal Credit Union will do loan on land. One of them wants 30% down, the other one wants 40% down when you finance with them. So having a seller finance option where you need to put a little less down often works out really great for people, but sometimes it doesn't. Let me explain. The seller is not a bank. Most circumstances, the seller doesn't want to be a bank. They don't want to make the interest on your money and carry a long-term loan on their land. Their favorite option would be cash out and they're done. But however, sometimes they're willing to take these seller finance options and get those monthly payments over time. And that works out okay for them. But they usually would like to be paid off in 3 to 5 years. 3 to 5 years, depending upon the price of the land, could be a problem for you to get that paid off in the 3 to 5 years with the size payments you would need to do that. But don't worry about it. They realize that that may be the case. So you're going to make a comfortable payment offer to them of an amount that will fit in your budget that you can make on time every month and pay toward the payment of that house, of that land that you're buying. Then the land may not be paid off in that 3 to 5 years. So you would write in your offer that you're going to make $500 or whatever $100 a month payments. At the end of the 5 years, you would have a balloon payment to pay and you would finish paying it off. So how are you going to pay that off at the end of the 3 or 5 years or 7 or whatever you've contracted on your seller finance options? What you're going to need to do at that point is refinance it, get a loan, or sell it, or have built enough equity on it, like starting to build a home, that you can go get a loan and pay off the person that you bought the land from in the first place. So this is a great option for a lot of people. A couple reasons why it's a great option is because when sellers sell their land on a seller finance, they're usually just going to look at your credit report from you and give an idea of what their credit score is. They're not going to dive deep into the back history of everything to do with you. They're just going to take a light surface look and see if they feel like you're a good risk for loaning to. They're not going to usually ask for who you're working for, how much your payments are, how much other debt you have out, and a lot of the other things that the banks are going to really dig into. So that helps a lot of sellers be able to sell with seller finance a little easier, and helps a ton of buyers be able to jump in and buy that way too. So here's what it looks like. You found a property you like. We're just going to use $10,000 because it's super easy. And you're going to put down $2,000 or $2,500. We'll go with $2,000 down, 20% down on the land. Then you're going to ask the seller to carry a note of $8,000. $8,000 is the note you're going to ask them to carry, and you're going to ask them to carry them for the next 3 years. They're going to ask for 6% interest on that, or you're going to offer anywhere from 5 to 7% interest on that loan for the next period of time. Banks that are loaning on land are getting about 6-7%. That's a going rate on a land loan. And also land loans are a little higher than the regular interest rate is for a home property. So as you're watching this video years later from now and these interest rates seem really off, just remember that land is usually a little higher than a home loan. So you're going to offer them the interest rate, you're going to offer it on the balance, and you're going to split out your payments. And then you're going to let them know what day of the month you want your payment to be due, and what late payment you're willing to pay if your payment is late. You also get to choose how late that is, whether it's 7 or 10 or whatever. You're going to write that up in the contract of when your payment is due, what your penalty is if you don't pay it on time. When it's time to start making those monthly payments, you're going to actually write those payments to the bank that's monitoring the account. So if you're with First National, you're going to write the check to First National and you're going to deposit there. They're going to track the interest rate, they're going to track the payments, and they're going to track the late payments if they're due. Lots of times the seller will let you just pay the taxes and give them a receipt and show that the taxes have been paid. Sometimes the sellers are uncomfortable with that and they want the taxes to be part of the payment you're making. In that case, they'll be monitored by the bank you're making the payment to also, and your tax amount will be divided by 12 and added to your payment so that it can be made out of that account on time by the bank. So that is an option on that one. So this is how it's looking. The overall big picture is you find something you love, you write up a nice offer, we submit it to them, we'll go to title and do closing. There'll be some closing cost. Depends on the price of the land and what that closing cost is going to look like, but you're going to have a portion of closing cost as well. And on the example I was giving you, the closing cost will be roughly around $500. So you would have those to pay when we go to the title to close. And then your next payment for your first payment for the land, that's a negotiable item, but it's usually 30 days out, and you're going to start making your payments toward purchasing the land. So I hope this gives you an overall idea of how that program works. There's a lot more to it, of course, and a little bit more choices to make along the way. But I just wanted to really stress that you can't buy something for nothing, and that we are asking the seller to be a bank instead of just a seller. And most of the time, the benefit for the seller when he is doing seller financing is that he's getting full price on his offer, on his land, and he's making the interest over time. And that's why this works out for the seller. For the buyer, works out for them too for a lot of different reasons. Mainly that's not that deep credit check. Second, they're choosing their payment amount. Third, they need a lot less money to put down. Lots of reasons why it works out for everybody. But key thing is you do need a little bit of skin in the game. And if for some reason you stop paying those payments, the seller can take his land back and it can belong to him, and you'll lose all the money you put down in the first place. So if you really want to buy a piece of land, this is really a great idea. If you really have more questions or comments, please mark below. If you think seller financing might be something good for you, then give me a thumbs up or say yes in the chat box. Or even if this was just helpful, give me a thumbs up. I love those. I hope you're having a great day. Thanks for watching.